Aloha and mahalo to all my fellow master traders and money magnets. Last Friday, the 200 daily moving average, some way, somehow, prevented a sell off. SPY gap down on Friday, guys. And it was at first when I saw the gap down, I was like, is this going to be a bearish island reversal? Because the way it's looking to me is this area right here from May 12th to the 22nd, that's looking like an island, guys. And technically speaking, Friday, even though we managed to avoid more downside and breaking down the 200 daily moving average, there's still technically a gap there that has not been filled. So that is a gap down, technically from Friday, from Thursday to Friday. There is a gap, and that so far it's still looking like an island. Let me remove that circle. And also worth noting that we did close below that multi-month trend line, guys. So as of right now, we're in limbo. Are we in breakdown mode? Are we about to bounce this coming week? First and foremost, hope you guys are having a great Memorial Day, having a great day off. But I tell you guys, the way I see it, whether it's going to be bullish or bearish this coming week, it's quite simple to me on what SPY needs to do. Now, day trading wise, you see the price action from Friday. I had a level at 576.5. We cleared that on the 930 candle. This was alerted in Uncle Charlie's Discord. But the reason why I'm telling you this is because I want you to see how Uncle uses the levels. I use a 15-minute chart. If we clear a resistance, you want to look for calls and play it level to level. And for a potential bigger move, we let our runners catch it. And if we break down a support level, that's when you want to look to short or puts with proper stop loss. You play it level to level and let your runners catch it. So example right here would be for calls. Notice how we cleared 576.5 on the 15-minute chart. We never broke back below it on the 15-minute chart, so there was no reason to cut loss, and it just kept on heading up higher for a few dollars. It was very nice. Now the question is, will we get more nice moves like that coming this week? If the answer is yes, and the answer is bullish, I do have a resistance level at 580, and to recapture this uptrend line needs to get above 582. So yes, we back tested that 200 daily moving average, and yes, we found some buying pressure. But if there's truly more upside and it's truly a bounce, like we're going to put in a higher low, if you will, if this back test as support of the 200 daily moving average is to be a higher low, then 580 and 582 must clear. The critical macro level at 585 must clear. I mentioned swinging puts below 585. We managed to get about a 10-ish, $9 to $10 move to the downside. That's decent for a swing trade, I think, in my opinion. But right now, hopefully you guys secured profit if you took that trade idea, because anything can happen this week. And if 580, 582 clears, that's a recapture of the multi-month trend line. And a recapture of 585 would be a recapture of a macro level fib level, putting 587, 589, 591, and possibly back all the way up to 595.5 in play. And if this low that we had on Friday is truly a higher low, there's a good chance we break through 595.5 on the next test to send us back to 600 plus. So the bottom line is, above the 200 daily moving average and clearing 580 and 585, that is your swing calls trade idea right there. If you guys want to swing calls, because maybe you got to work, you don't have time to day trade, you need a good long. 580, 582, and 585 are the levels you want to watch. Make sure if you're going to swing calls on the recapture of those levels, make sure that those levels are actually recaptured, at least on the 15-30-minute chart, with a proper stop loss, and have enough time on your contracts. That's my trade swing idea for you to the upside. Now, If we stay below 580, there is no reason, especially 580 and 582, there's no reason to go long. The reason is the breakdown stays intact. If the breakdown stays intact, there is no trigger to go long. We're in breakdown mode. Now, the bearish follow through would be to break down 577, 575, and of course, 573.5. Now, 575, it's around where the 200 daily moving average is. So breaking that down, we lose the 200. Breaking down 573.5 is a fib level, a micro level fib level, but it's still a fib level. Losing those levels would be your bearish follow through, that the breakdown stays intact. You can swing shorts if you want because we are in breakdown mode. Losing those levels, especially the 200 daily moving average, would be very bearish. There is no bull market where the price trades below the 200 daily moving average. So bears, that's what you guys need. Staying below 580 and 582 to maintain the breakdown of the uptrend line and breaking down that 200 daily moving average for some swing shorts, swing puts. I prefer the day trade. It's more easy for me, but I understand that you guys don't have the same schedule as I do, but it doesn't mean you can't make money in this market. And I'm telling you, if we can break down those support levels, especially the 200 daily moving average, should be good for some swing puts, but you still got to put in a proper stop loss. You still got to put in a proper stop loss because there's no guaranteed in this market. I can give you guys trade ideas with a 60, maybe, if I'm nice to myself, 80% odds in your favor, but I can never, ever give you guys a 100% trade idea. I can never. Even if I wanted to or I tried my best, there's no 100% in this market. I can give you the highest odds, and which I'm doing right now, but it's not 100%. You still got to respect your stop loss. All right? I hope we're on the same page. I hope we understand the plan for tomorrow. Now, moving on to Triple Q. We had the inside candle set up. The low was around 511, and 511 was also a fib level, macro level fib level. We retested that area as a resistance, found some selling pressure, and we broke it down. So 511 for this week is your equilibrium level. Above it, we can bounce. Below it, stay bearish. Now, we're below 511, and 509 and 507.7 fails. You want to go short. And I do have a target down to 499. That's a fib level. And we could retest the multi-month trend line, this yellow up multi-month trend line. But if we recapture 511, guys, there's a good chance we go bounce back up to 515 or higher. Recapturing 515, we get back above the 5 daily moving average. You guys can see when we spend time below the 5 daily moving average, it's kind of bearish. Price has a tendency to push lower. Maybe not traditionally, but it has a tendency to push lower. So getting back above 515 and 517 would be a good win for the bulls to put 522 back in play. And clearing 522 would make last Friday's price action a higher low that can send us to higher highs. So no higher highs unless 522 clears. But to even get there, 511 must clear, because if we're below it, overall bearish. NVDA, well, it managed to avoid a breakdown of the fib level at 130.6. It's also where the mother candle's low was based on the inside candle setup. 130.6 is still the level to watch. It's been my level to watch for a little bit here. But we need that daily chart breakdown if we are to get bearish to put the 200 daily moving average back in play. That's all the way down at 126. So 130.6 must fail to put 129, 127.2, and 126 back in play. Below 126 would definitely be bearish. But to get there, we need that close and breakdown of 130.6. Otherwise, recapturing 132 and clearing 133.5 and 135 would be bullish. Put in the higher low. It should send us a new highs, maybe 140 plus this time. Tesla, it's stuck in the middle of a megaphone pattern. We've had multiple tests to the top, more than 3, as you guys can see. More than 3. And also test as support, more than 3. So we're in the middle of this megaphone pattern. You guys can see megaphone patterns, it gets wider and wider. So I'm expecting, I could be wrong. I don't think I'm going to be wrong. Based on the way how well this megaphone pattern's been respected, I don't think I'm going to be wrong. But based on this structure, there's a good chance volatility will increase for Tesla. If you're gonna trade Tesla, this week is coming up. That's coming up. It should be great if we start filling this megaphone pattern to the upside and to the downside. I'm talking $15, $20 plus to the upside, $15, $20 plus to the downside. 339.6 is the level to watch. Above it, we can bounce. 341, 343 should send us higher. I'm talking $15, $20 plus to the upside. But if we're below 339.6 and we break down 338 and 336, I'm talking a 15, 20 plus dollars back to the downside. Add those levels to your charts and wait for reaction. Here is coin. Looking a bit strange here, coin. Rising wedge, little doji. We'll see what it wants to do. But 270, well, 265, 268, 270, and 271.3 are the levels to clear to be bullish and send us much higher. I think we can pop up to 280, 290 area. But I tell you, if we break down 260 and the fib level at 257.5, it's going to be a nasty drop to the downside, and this rising wedge should give us a rug pull style drop to the downside this coming week. Be prepared, guys. And here's the VIX, looking like it wants to give us some volatility and bounce to the upside. If that is the case, 23, 25, and 26.5 still must clear. Daily chart closes. That should be nasty to the upside, guys. Big volume, big body. That's what you want to see. Little small pops. You want to see a big explosion. Okay? And that's be a good sign that we're going to get some great volatility with SPY and friends. But if we break down support, I have support at 20.5, 19, and 17. If those levels fail, should be a nasty drop to the downside. And if VIX is bearish, that could mean SPY is bullish. All right, so be prepared for anything this week. It's a short week, only 4 trading days. But you know what they say, quality over quantity. All right, money magnets, good luck this week. Mahalo. Peace.